Back to markets at noon. Let's go across and do a very interesting discussion on the consumption pack. Shirish Pardeshi, senior analyst FMCG at Centrum, is now joining us. Shirish, if you could just talk to us about the new consumption trend, the recent report that you have written about rural India and how some of the other semi-urban areas are now as big as bigger markets for these FMCG companies. Shirish, can you talk to us about your recent report of rural India driving consumption story?
Yeah, hi, good afternoon, Pankaj. What we have done is that our comprehensive study on India's consumer and their consumption pattern unearthed two significant developments. First is fast-growing consumption in central India, rural states, what we call them as new rural, and the structural shift underfoot towards the non-food items. As we understand, in these states contribute roughly about 26% of GDP. But if you look at the GDP over last 6 years has outpaced the India's growth. And the significant changes which are happening is strong income growth, which is led by your non-farm income, which is growing faster, and of course MSP is helping. The strong government push in terms of your macroeconomic effects like rural development, infrastructure development is showing up in terms of demand. Obviously what we infer is that when your income growth is growing faster, obviously there is a structural change in terms of consumption pattern. That's what we try to check.
Right. So what is it all leading to? What is the size of the market? How do you think it can grow from here on?
So in terms of number, broadly if you understand the India FMCG market, which is roughly about 60% is urban and probably about, you can say about 35-40% depending on the companies. But if you look at the new rural, which is what we call it as a central India rural states plus Odisha, is contributing roughly about 30% of the FMCG contribution. What you must know is 45% of India's population reside here. 47% of India's rural household are residing here. And if you look at the GDP per capita of these 7 states is averaging between $800 to $1,000. But if you look at all India average is about 2,200. So there is a significant room in terms of category penetration. What our data suggests and our field study suggests, these markets were covered using the wholesale channel. And this wholesale channel has some disruption post GST and demonetization. So what the companies are trying to do is develop its own infrastructure network in terms of coverage and then trying to get the penetration on their control. So that helps, and saying that the consumption is there. Consumption was serviced through some channel, but however with growing incremental reach to these areas, ease of reaching to these masses is helping us or the companies to grow their distribution faster and thereby catering the demand and meeting the consumption challenges.
Hi Shirish, good afternoon. Antara joining in from the New Delhi studio. So from everything that you've been saying, I'll get to the challenges in just a bit. Clearly your strategy seems to be, or an observation you seems to be, or you are still believe in the story of there's an India and there is a Bharat. Therefore, do you look for stocks which have more access to the Bharat, to rural India, and then which ones would they be? Because that does seem to be the strategy you're dovetailing.
Let me answer this way. We are biased towards companies who have a very strong rural portfolio in terms of meeting their consumption patterns, in terms of understanding the low pop strata which consume the low price unit packs or low price points, and more importantly their reach. So if the reach is there and supplemented by your product portfolio, I think there is a chance that these companies will be winners of tomorrow. What we're trying to say here is that the consumption pattern is also driven because the government data suggests about 49% of medium and small farmers, which are marginal farmers, what we call, reside in these areas. And with government's PM Kisan Yojana, which is going to go 6,000 rupees, this is a significant improvement in their in their life, and the consumption will go. So what we are saying three things. One is that your portfolio of product which entice or which helps from the consumption point of view. The second is that the price point which is meeting their outlay of products. And third is that we said that the non-food consumption is going to grow faster. So there are some categories which we have seen. For example, cooking oil is one of the key categories which is dominant because of your family food concept. But if you look at personal care, which is very strongly growing, say in the parts of UP and Bihar, or probably in MP, you would see that foods is still dominant. So probably biscuits or salty snacks is the categories which are showing the momentum.
Okay, Shirish, we're going to leave it at that. Thanks so much for joining us. So that's Centrum's FMCG play and strategy. It is election season. It is typically when you see consumption going up.